Well, folks, I made a very difficult decision here today, and I did decide to sell out of a stock completely. I sold all of my shares, 100% of my stake in the company. I was about $50,000 in proceeds from the stock. And so we're going to go ahead. We're going to go through what stock I sold, why I decided to make this decision. It was a tough decision. Nonetheless, we're going to speak about the 5 stocks I bought with the money. I divided that money between 5 different stocks. One stock was nearly a $20,000 buy. So we'll speak about that. And we'll also speak about why today. Do I know something? Why make this move today? So we'll speak about all that. I appreciate y'all joining me as always. Thanks so much for being here. Thank you for being subscribed to the channel for this one here today. So very tough decision, and it's tough for 3 reasons. One is the stock has been a money maker for me. Second reason is the stock could likely be a moneymaker in the future. And the third reason this is a tough sell is it's actually a very nice dividend paying stock as well. And so when you look at it from that angle, it definitely makes it a tough decision. The easiest sells usually are a situation where there's a company, you're like, this is a really bad company, I need to get out of this. I can't put this stock into that category. It's actually a very good company, good balance sheet, good income statement, just really good company, good products and services overall. And the other easy sell is if a stock's massively, epically overvalued. That's not this stock either. So that's what makes this a very tough decision. So hope you get some really good value out of today's video in not only hearing what stock I sold, but also the justification for that, and then hearing the stocks I bought. So appreciate y'all joining me. Thank you for being subscribed. If you're looking to apply, join my private group this week, check out the pinned comment down there. You get access to all my best courses, access to 6- and 7-figure Discord chat, all the moves I'm making on my nearly $2 million Fidelity account, all that good stuff. That's pinned comment down there. Alrighty guys, so the stock I sold is Skyworks Solutions. Yes, I sold the remaining 500 shares I had of this stock, sold them at $99.85 in regards to Skyworks. Now, Skyworks makes a lot of different semiconductor chips for a lot of different products, but they're known because they're a big customer. Theirs is Apple, okay, and they're known for having several different semiconductor chips that go into iPhones, okay? And the company's built an incredible business over the past, I would say, 10 to 15 years. And one of their biggest customers to help them get there was Apple, right? Now, there's problems. And there's problems with Apple. There's problems with Skyworks, okay? So in their latest quarterly results, Skyworks forecasted a very weak outlook. Now, it would have been one thing if the weak outlook just had to do with Apple and iPhone. But what we found is the outlook being weak wasn't just to do with Apple. The company said while demand for the smartphone business stabilized, Skyworks said it expects other sectors to remain weak. So their other businesses outside of Apple sound like those businesses are weak. So we have a situation where Apple doesn't have the most compelling products in the market, while simultaneously their other spaces they compete in are also weak at this time. That's a no bueno situation, right? Now, if you look at the earnings of this company over the past several years, we have a big problem here. And this is something you should always pay attention to with your stocks that you own and you might own in the future, is what's going on with an earnings trend. And if we look at Skyworks, we're going to find something very troubling. And that is earnings have been going down and down and down for this company for several years now at this point in time, and it still hasn't turned around. And so it's one of those situations like you're waiting and waiting, and I've been waiting on Skyworks to turn it around, and they just haven't been able to do it. Look at this. Q1 2021, they had $3.36 of EPS. Then they went down to $3.14 of EPS the following year. Then they went down to $2.59 this past year. This year they'll probably do somewhere between $2 and $2.50, right? Which means it's likely going to be 3 straight years of earnings down for Skyworks Solutions. Not only is that troubling, but also recently they've been missing some numbers. Skyworks usually was a company you expect to beat numbers. Now they're starting to miss. They missed back in the first quarter of 2023 EPS. Then they missed the second quarter of 2023 EPS. They missed in the third quarter of 2023 on revenue and the second quarter for revenue. So overall, that's a troubling signal that, earnings just continue to go down. And so it's like, you keep waiting for things to get back on the right track, and it's just not happening. And then you get confirmation about a weak outlook, and that's no bueno, right? And so in yesterday's video, we spoke about Alibaba, we spoke about PayPal, and if those stocks are value traps, right? And if I look at Skyworks, I almost feel like this might potentially be a value trap, where it's just like, you think it's going to turn around, and it's just It's just not turning, right? I watched the interview that happened with the CEO of the company. He went on Kramer back in the summertime, and I didn't get anything from that interview that made me super excited about the future of Skyworks in terms of like, oh, we got some game-changing chips coming out and some new spaces or something like that. I listened to the latest conference call, also didn't get any confirmation. What it sounds like to me is Skyworks just kind of like trying to execute their business the best they can in this sort of environment and kind of hoping for things to get better. That's not a great position to be in, right? And that's a very different Skyworks than it was years ago when, there was always something to look forward to. There was more content they were going to get in the new iPhones and all those sorts of things, right? Now, on top of that, the smartphone market, which is a huge portion of their business overall, we had a massive innovation cycle that transpired from 2008 to 2018, right? Steve Jobs shows off the first iPhone in 2007, and it's a game changer, right? And sales start to roll in for that in 2008. And like I said, for that decade, it was massive innovation, happened year after year after year. If you look at the original iPhone versus, where the iPhone was in 2018, it was a night and day difference. My gosh. And that goes for everything, the chips that were in it, the camera, everything. My gosh, what a change. But that was the old days, and now we're into a new generation, and I think we're kind of a little bit in the dark ages of the smartphone now, where the epic changes you got year after year after year, it seemed like, back in 2008 through 2018, those days are long gone. And if you even look at like an iPhone 12 Pro, which launched years ago, versus like an iPhone 15 Pro, the average person wouldn't notice a difference in camera quality, in screen quality, in how fast the phone works. Like the average person would not notice a difference. You have to be like super into cameras or super into how fast the phone works or something like that to even at all notice a difference. So even the look of the phones are nearly identical. And these are, over several generations ago, right? Since the 12, the 13 came out, then the 14, then the 15. So we're talking about this 3+ years ago. So this has happened now. We're entering the dark ages of the smartphone, and it is what it is, right? Now, these sorts of semiconductor stocks, they go through these dark ages in the past, and you got to watch out for these because you could have your money be dead for a decade, literally. Cirrus Logic was a stock I owned, over the past 10 years on and off throughout the years. They went through a dark ages from 1998 through 2008. The stock did horrible during that time period, and there just wasn't a lot of excitement for these sorts of companies. Skyworks Solutions, same exact thing. The stock went nowhere for a decade, and the stock went absolutely nowhere for Skyworks Solutions, right? It had that huge kind of tech bull, move there, but then after that, it was just down and down and down, right? And if you look at what happened from 2008 to 2018, my gosh, a lot of these stocks 10x. Skyworks and the Cirrus Logics and those sorts of companies. There was many others that their stocks went up 500%, 1,000%, several 1,000%, because we were in a super innovative era where it was just about sales and sales and sales, and companies like Apple and all the others were just trying to innovate as fast as they could, and the semiconductor companies just got pushed and pushed and pushed, and it was beautiful. It was beautiful, but those days are over, right? Those days are over. You look at Skyworks, even the past 4 years, this is looking like it's going to be a dark ages decade where the stock has some, short-term bump ups where all of a sudden it looks like, oh, things are bright for the next 6-12 months, and then it comes back down, and ultimately you end up at the end of the decade with not much to show for it. And it looks like we're kind of moving into that decade. The numbers and the stock price performance are kind of showing that. Look at where the stock price has gone over the past 4 years, and look where their numbers have gone, especially since kind of 2020, 2021, it's been not so exciting. No, when in regards to our biggest customer, Apple, right? We got problems. Apple clearly cares about iPhone and services. Like that's their biggest care for them, right? But the problem is services doesn't really help Skyworks at all. It doesn't help Skyworks at all. iPhone does, but the problem is Apple's very focused on price in margins rather than trying to move units. Skyworks needs to move units. Apple's focused on moving whatever units, but we just want to get big margins. So it's almost an opposite philosophy like Elon Musk has with Tesla, where Elon Musk keeps cutting the price of Teslas over and over for like a year and a half straight because he wants to move units. Apple has a very different approach. They say, we don't care about how many units we move. We want to take price. They even raise the price of iPhone. Even in a weak environment, they raise the price of the latest iPhone for the pros, right? That speaks volumes. That's not good for Skyworks. Skyworks needs volume. They need units, right? So then if you look out there and you say, okay, well, they have a lot of Android customers, but the problem with the Android market is Qualcomm bundles a lot of these chips. And it's very important you understand this if you ever want to invest in any of these sorts of companies. Qualcomm has like a bundle they do with Android. And this makes it very difficult for companies like Skyworks, Cirrus Logic, and many others to really compete in the Android space the way they want to. Because Qualcomm will do these big bundles and they'll discount their chips if you buy all the chips, all Qualcomm. So that's not an ideal situation at all for a company like Skyworks Solutions. So that creates a very tough dynamic in terms of Skyworks trying to grow their business in Android in any substantial way. And Skyworks and Cirrus Logic, companies like that, have always talked about growing in Android, and they've done it a little bit, but the problem is you have this behemoth that's Qualcomm that just is always there to kind of fight you down, right? Now, what I'm showing you right now is iOS versus Android market share. And this is on a global basis, okay? This was updated just less than 2 months ago. So if we look here, this is no bueno for Skyworks. In the latest quarters, Apple with iOS was down to 16% market share, whereas Android's at about 81%, right? If anything, Skyworks needs Apple to be taking market share, not losing market share. Now, if I show you China market share for iOS versus Android, it's even more troubling. The latest quarterly numbers came out at iOS having about 14% market share. This is bad, guys. This is the lowest it's been in years and years and years. If you look at the past several years, you can't even find it ever as low as 14% market share. So they have big issues. Apple has big issues in China. And so it seems like Android's doing better. But the problem is, once again, Skyworks has trouble really growing into Android. And the other issue with Android is really focused on cost. Really focus the Android. A lot of those Android smartphone makers, they don't care about having the best chips. They care about price because they sell into a lot of price-sensitive markets to price-sensitive consumers, and so they a lot of times they'll look at it and they say, "What's the cheapest option we have?" Not what is the best option. What's the cheapest option? And for many times, it's going to go to the bundle that is Qualcomm. So that makes it very difficult for a company like Skyworks to really grow into that market. So at the end of the day, Skyworks needs Apple to start moving big units of iPhone. But Apple's having trouble innovating there, right? Now, if you want to look at some bright news, it could be around iPhone 16. So when it comes to iPhone 16, Apple is supposed to launch bigger sizes of the iPhone. Now, traditionally, whenever Apple launches a bigger iPhone, it's a big deal. And usually they see a big uptick in units. So that could potentially be something that benefits Skyworks. But that's about all we have for bright news for Skyworks, unfortunately, is the hope that iPhone 16 sells really well because maybe Apple launches larger iPhones, and that makes some consumers say, I want the biggest iPhone. We'll see, okay? So that's kind of the story with this one. Now, I went ahead and took the rest of the profits in regards to this one. It was about $14,000 in profits, a little over $14,000. I already took a lot of my profits on Skyworks last year. And on top of that, the company did pay me out a lot of dividend money over the years as well. So Skyworks was never as successful as an investment as I wanted it to be. But with that being said, it was still a big money maker. I still made multi-five figures on the stock between all the shares I sold over the past year, plus all the dividends I received, multi six figures I made, or not six figures, 5 figures I made. But I was really hoping it was going to be 6 figures plus gainer. It wasn't that. It didn't turn out to be that. Now, what do I do with the stock like Skyworks for here on, now that I sold out of it completely? Well, I keep an eye on it. I'll keep an eye on it in the future. I might buy Skyworks again someday. I might. Whenever I sell out of a stock, as long as a company's a good company still, I still keep an eye on it. If it's garbage and I'm like, there's no point in me even paying attention to that, it's a sell and forget, right? It's like breaking up with an ex that you're like, I hate this person. Like, I never want to see them again, never want to acknowledge them, don't want to see them on social media, nothing, right? Versus maybe you had a mutual breakup or something like that. It was a little more positive. So that's where we're at with Skyworks, okay? Alrighty, so next up here, what are the 5 stocks I bought? One stock being nearly $50,000, or $20,000 buy, nearly $20,000. And then I did do a pretty shocking buy here, okay? So what is a shocking buy I made here, Dave? Let's get into that one first. It's Tesla. It's Tesla, folks. Yeah, I bought some Tesla shares here today. And we'll get into why this is such a shocking buy in just a moment. But I did go ahead and buy 35 shares of Tesla stock here today. I do believe we're near peak fear for Tesla. I don't know if we're quite there yet, but we're near that range, okay? And when I say near, and keep in mind, I do have a hedge on for Tesla that basically is betting on the downside of Tesla also. So at some point, I'm going to take profits on that probably in the next 3 to 6 months at some point in time. But for Tesla, I mean, I don't think it gets worse than the story's gotten right now. I mean, it's just everything's been thrown at the company, the margins, price drops, negativity, Elon Musk, blah, blah, blah. I mean, it's just been a thing after thing after thing for a while now at this point in time. So I think we're getting close to that peak fear stage in regards to Tesla. We might not quite be there, but we're getting close. And so I said, let me go ahead and snap up some shares here today. And so I went ahead and bought 35 shares of Tesla. Now, this is such a shocking move. And the reason this is such a shocking move, we all know I'm super bullish on Tesla. I've been super bullish since a long, long time ago. Like, I've been an investor in this company for, 5-6 years or whatever. And always a huge believer of the company. Loved everything they're up to, what they're doing, all those sorts of things, right? Been very proud of that investment. So that's not why it's shocking. Why it's shocking is it's by far and away the highest price I've ever paid for Tesla shares. And it's not even close. The most expensive shares I ever bought a Tesla outside of these 35 shares is right here on December 22nd, 2022. I paid $124 a share for these 20 shares right here. So outside of that, this is by far and away the most I've ever paid for the stock. $214.92. Yeah, that's a huge steep up. I mean, look at this. The cheapest shares I ever bought were right here. June 4th, 2019, at least in this portfolio, June 4th, 2019, I bought 225 shares at $12.57. So, okay. But yeah, that's why it's such a shocking move, but I remain very, very bullish on Tesla for the long term. I'm not bullish on Tesla, by the way, in the short term, meaning the next 3 to 6 months. I am very bullish on Tesla the next 3 to 6 years. Let me be very clear about that, okay? All right, next stock up here I did buy is Cake. This was my smallest buy of the bunch. I bought some more shares of Cheesecake Factory, 45 shares. I paid $32.05 for those shares. 45 shares there. I'm up to 1,145 shares in the public count. I want to own a lot more shares than that overall for Cake. Before I went out of the country, I spent a couple days in Arizona, and one night we went to the Culinary Dropout. Just what an impressive place. And this is a concept that Cheesecake Factory owns through their FRC concepts. I mean, just so busy, so poppin'. It's got the cool crowd there, let's just put it that way. And just so phenomenal. I mean, food quality is so good. The environment's so good. Just blows me away, okay? Then the next night we went to Olive and Ivy, and this is another concept that's owned by FRC Concepts. Just, oh my gosh, the service so freaking phenomenal. The food was all amazing. I mean, just knocking it out of the ballpark. And so they own this FRC Concepts. It owns all these different concepts, and I'm just like, I think long term this is going to be more valuable than the Cheesecake Factory. And I know that sounds crazy to say that, because obviously the Cheesecake Factory is such a legendary, like one of the most legendary sit-down restaurant brands in the world. But I think this is a bigger opportunity actually than even the Cheesecake Factory, because I go to these places and I'm like, they're knocking out the freaking ballpark with the service, with the quality of the restaurant in terms of the ambiance, and then the food quality. I'm shocked. I'm like, how do you guys keep doing this? And I've gone to like all these different concepts, and every single one knocks out of the ballpark, and I'm blown away. And not to mention North Italia. They're up to, I think they're going to hit 38 locations here very soon. That's the most immediate huge opportunity for Cheesecake Factory. And I'm just like, dude, this is insane. Like this is one of the companies I'm most confident in for the next many years, because I just see their service levels, their food quality. I don't think you can compete with them. I mean, they're just doing it on a whole different level. And when you really go to experience these places, you really realize what they're up to here. Recession. You might think, oh man, recession must scare me with a stock like this. No, not at all. Could recession hurt the numbers a little bit short term? Sure. But a recession would be the best thing ever for this company. And the reason being is the labor market is extremely tight right now. Okay, extremely tight labor market still in the United States of America. If the labor market can loosen up a little bit, that could mean this company could actually expand more rapidly, because the number one thing that's preventing this company from, let's say, taking a Culinary Dropout and saying, let's go build 20 locations next year instead of 2 or 3 locations, what's preventing them from that? It's human capital. It's being able to get enough quality workers to have the sort of service levels you need. On top of that, if you're in kind of a more booming economy, it's tougher to get construction projects and permits and things like that, right? So the recession would actually be the best thing ever for this company, because that would help them out immensely for the next 5 to 10 years. So I don't fear a recession at all with this company. I think it would actually be a good thing, a hugely good thing for somebody like them. Okay, so that is Cheesecake. Bought that one. Going to continue to buy that stock. Next stock I bought up here is PayPal. You knew this one was going to be on here. You knew this had to be one of the 5 stocks, right? If you follow my channel closely, you knew you were going to see PayPal on here, okay? So I bought 222 shares of PayPal, and I paid $59.56 for those PayPal shares. That puts me now up 2,222 shares of PayPal in the public account overall. Yeah, you guys know how bullish I am. I don't even think I need to speak on it, to be honest. I spoke on it so much, over the past couple months on how bullish I am on PayPal and how great of a deal I think this is on PayPal stock. We'll see. Time will tell. We'll see in a year, 2 years, 3 years from now if this was the deal of the century like I think it is. Earlier today on my reaction channel, I posted this video, PayPal CEO. He actually went on to CNBC here today for his first ever interview on there. And so I reacted to that on there. So if you didn't get to see that and you care about PayPal, definitely check out the reaction channel. If you haven't followed the reaction channel, you might want to do that. I react to some big videos, like big channels. I also react to smaller creators and things like that. We're up to 37,600 followers on that channel. Jeremy Lefebvre makes money for that one if you want to follow on there. Okay. Next stock I bought here is Nike. Big buy for Nike. Okay, big buy. This was the one that was approaching a $20,000 buy. It was a little under $19,000. I paid $100.77 a share. 185 shares here of Nike I bought. Love this one. Here in regards to Nike, it's a rare opportunity. This stock has gone nowhere for 4 years. 4 years. You're not going to find very many 4-year periods where Nike stock went nowhere. We're in one of those time periods right now, right? And you can kind of understand that we've been in that time period with consumer confidence being as low as it's been, with the consumer being hit as bad as the consumer's been hit, with China being in as bad of a recession, in my opinion, recession as they've been in, with youth unemployment in China that's been somewhere around 25%. Like, I understand why Nike hasn't gone anywhere for 4 years. It makes sense. But with that being said, this is a very rare opportunity, and I'm not expecting to get the stock lower than now in 4 years from now. Let's just put it that way. Now, when it comes to Nike, their fiscal year ends at a kind of a weird time, May 2024, so I'm not expecting good numbers from Nike for their next quarter, the report, or the following quarter, actually. I'm not expecting those quarters to be good. But what I am expecting to be very good is they're after May of 2024, basically. Okay, I'm expecting that year to be phenomenal, and I think analysts are far too low with their EPS estimates in regards to Nike. Nike's doing a big restructuring. They just announced it here. They're going to cut about $2 billion in costs, and so I'm looking at this and I'm saying, this is not a small amount of money they're cutting here. It's $2 billion roughly in costs they're going to cut over the next year or two. I think they're going to do a lot of that cost cutting over this next 6 months, which is going to position them extremely well for that fiscal year that ends in May of 2025. And so I think their earnings per share is going to skyrocket in that particular year. I think there's potential they could do $5, $6, maybe even $7 of EPS in that particular year, unless we're in some sort of massive recession or like something like that. But you could say that for every company. That would obviously hurt their numbers. So in regards to Nike, really liking kind of where I'm at here. And if we think about, I think Zuckerberg with Meta last year, or actually now it's technically 2 years ago in 2022, with his big cost cutting, he showed the world that you can do a big cost cut. It's going to help your profitability immensely, which obviously it did for Meta, right? But you're going to be able to move your business faster and innovate faster and change the game faster. And that's what Meta's really been able to do. And, it's my biggest position in the public account. We're doing phenomenal on it. It's up to nearly a $700,000 position now, up $447,000. And I look at a Nike with these cost cuts, and I see a company that's going to emerge way more profitable, and a company that, in my opinion, is going to move much more rapidly than, because at the end of the day, the more employees you have, the more potentially bad employees you're going to have that are going to kind of eat your culture alive. You're not going to be able to move as fast as a company. You're going to be very bureaucratic, and that's what's kind of going on here. So in regards to Nike, I'm up to 300 shares now in the public count. I want to build this position rapidly over this next 6 months. And to be quite frank, if not over the next year, there's no limit on the amount of shares of Nike I could own. Like, I could own unlimited amount of shares because it's that good of a company. It's that high a quality. And so, how many shares would I own in Nike? I don't know. It's pretty unlimited, to be honest. All I know is I need more shares of Nike. More shares and more shares and more shares, okay? Next stock up here of the bunch that I bought here today is Alibaba. Big buy for me here today in regards to Alibaba. Well, relatively big buy. 132 shares I bought. I paid $68.79 for those Alibaba shares here today. Now, with Alibaba, it's a very different situation than a Nike. Like Nike, I just said, I could own an unlimited amount of Nike shares, right? Alibaba is not that stock. Alibaba comes with risk. It comes with China risk, right? Has huge upside potential in this stock, no doubt about it, but it does come with this risk. So in regards to Alibaba, I would love to get to a place where I own between 500 and 1,000 shares within 6 months of this stock overall. This is another stock I look at and I'm like, I don't think the fear around these Chinese stocks gets much worse in here. I think if we're not at peak fear in regards to these stocks, I think we're pretty dang close. And so I think I need to build this Alibaba position pretty rapidly over this next 6 months until I have it built where I want it to be built. And then from there, it's just going to be a hold for me. This is not a stock I can buy unlimited amount of shares like a PayPal or a Nike or some of these other companies, a Cheesecake Factory, even, that one I love so much. Now, in regards to Alibaba, if you want to hear me speak more in depth about that, check out my 7 stocks I'm buying video I put out a couple weeks ago. It's up to 61,000 views now at this point in time. And in that video, I talk about Alibaba. I talk about several different stocks, obviously, but Alibaba is one of those stocks, and so you can kind of get that as a refresher on why I'm bullish on the stock, why I think it has a big upside over the next, let's just call it several years, to be honest. I think it's going to actually be a multi-year move in regards to somebody like an Alibaba, and I think 2024 will just kind of be the start of that move, but we got to bottom this baby out first and kind of trough this baby, okay? Appreciate y'all joining me as always. I hope you enjoyed today's video. Hope you got some good value out of it. Also, if you're looking to join my private stock group, then apply to join. That's pinned comment down there. You get access to all my best courses, access to my 6 to 7 figure Discord chat, access to see the moves I'm making, my nearly $2 million fidelity account, all those sorts of things, plus a lot more. That's pinned comment down there. Much love and have a great day.